Good afternoon. This is Eric Levinson, Head of Business Development for VinaCapital, and welcome to day 2 of our investor conference. Yesterday, we featured an update on VinaCapital, and then you heard from Michael Kokolari, Ismail Pili, and Kyle Kellhofer of the IFC on a macro update for Vietnam and an update on the stock market. Today, we have a very special guest, Mr. Tra Le. Thank you for joining us. Tra is the CEO of the Ho Chi Minh Stock Exchange, and he and I are going to do kind of a 20-25 minute Q&A, and so thank you in advance. Many of these questions came from our clients, and so those of you who have asked about what's going on with the exchange, the future of technology, what's happening with trading volume, well, I hope you're tuning in because we're going to have a great discussion. So again, thank you for joining us. Let's go to the first question that was submitted from our audience. So earlier in 2021, there was talk of the Ho Chi Minh Stock Exchange, the exchanges in Hanoi, all coming together, being moved to Ho Chi Minh City. Is this still being planned? And if so, what are the potential benefits for investors both domestically and internationally?
Right, so to cut the long story short, right? So the stock market in Vietnam has been in place over the last 21 years. So Ho Chi Minh Stock Exchange is where the stock market in Vietnam started. And then we had the brother one, which is the Hanoi Stock Exchange. In terms of the market capitalization, so Ho Chi Minh Stock Exchange is much bigger. Currently, in terms of the listed segment, we accounted for about 96% of the total market cap of the listed companies in Vietnam. So under the new structure of the corporate governance, so we came into a holding structure. So on top of the existing Ho Chi Minh Stock Exchange and Hanoi Stock Exchange, we had the Vietnam Exchange on top of that as the holding company. And as a result of that, there's a consolidation in terms of the trading products. Because Ho Chi Minh Stock Exchange is already the major player in the equities market, so that's why everything will be consolidated into Ho Chi Minh Stock Exchange. And that is planned, and from now until the second half of the 2023, according to the roadmap, that process will be completed. And at that time, everything will be consolidated into Ho Chi Minh Stock Exchange. And one of the major benefits for public investors that is much clear definition of the listing requirements, if you want, in terms of the criteria, what is what. Because for now, for example, some people are still confused. So what is that Hanoi Exchange? To be listed on Hanoi Exchange and what it means on wholesale.
Yeah,
so that's why, it's much better, in terms of the transparency for public investors.
And it's interesting because oftentimes we get that same question about, hey, the Hanoi Exchange performed X amount, and then we say, well, it's a very small percentage of the companies.
Right.
They're very, very, very small stocks.
Right.
They're not very liquid, not very investable. And so
also, in terms of the companies, so they say that, well, there's some big companies on Hanoi Exchange as well, not only on wholesale.
Yeah, it's terrific. Thank you. So now when you answer the question about coming together, obviously it's a longer term project. There's got to be technology involved. There was supposed to be this big new trading platform based on, I believe, Korean technology that was supposed to come in over the summer of this year, I believe.
Right.
Delayed clearly because of COVID.
Right.
What is the updated? Is there an updated timeline? I know FPT came in with an interim solution that really kind of fixed the trading glitches, so that was terrific. Is there still a path to that overseas technology, and if so, why? And what are the benefits?
Well, first of all, I just want to make it clear that the system or the platform that we are working with the Korea Exchange at the moment, that is a very big project. And that covers the whole value chain of the stock market in Vietnam, including trading, market information, supervision, clearing, settlement, depository, everything. So you can imagine that besides some of the legacy system, like our government bond trading system on Hanoi Exchange, will remain, everything else will be turned to that new system. So it's kind of big bang in terms of the technology. And the reason why we want to do this is really our perspective in terms of what we can learn from the good practices or the experience of the market development around the world. That's why we decided to choose some capable system provider to buy from, so that in that software, this is not only the technology, but there's a lot of the ingredients of the expertise, of the experience in terms of the market development in there.
Interesting. So instead of trying to build something, you really said, let's find technology that works for us. And importantly, not building what I would call a 2-lane highway when you need a 4-lane highway, but building a 6-lane highway.
Right.
So when you get there, 20 years from now, it's still operable.
Right. And the other thing is that because we are much young market in terms of where we came from. So it's really, there's a lot to learn from. And if the other markets already have 100 years of the experience and expertise, why not to learn from them, to make the shortcut?
Interesting. Now, thank you for that. So, technology is obviously a huge thing that comes, and it is interesting how you could say the intersection of financial services and technology keeps getting closer.
Right.
One of the questions that we get from our clients all the time, and these are clients and prospects, is about ESG. Mm-hmm. So particularly when we're talking with European investors and even now investors here in Vietnam, continues to be a topic. We know that the Ho Chi Minh Stock Exchange has updated their requirements for listing companies. Can you comment on how the exchange can or cannot influence corporate behavior and corporate governance? And is this a focus for you?
Right. So since 2012, Ho Chi Minh Stock Exchange became a partner of the United Nations, what we call the Sustainable Stock Exchange Initiative, SSE. So as a partner of that initiative, we are in the position to promote the ESG investment theme in our market. And over the years, we've done a number of things in terms of education, in terms of making our listed companies aware of what the expectation from the investment community out there. So besides that, one of the very important events that we have done over the last more than 10 years, which is, we're talking about the Listed Companies Award. So this is an annual event, and we try to pick the companies with the best reports, not only financial, but also non-financial, including corporate governance in terms of sustainable development as well. So we gradually expand the perspective on how the investors is actually looking at the listed companies. Also, we try to benchmark our listed companies against the regional companies. So for example, we take the ASEAN corporate governance scorecard, and we try to make it comparable to Vietnamese listed companies. So that's the kind of exercise that our listed company will go through, and that will help them with better understanding and about the expectation from the investors.
And so interestingly, and I didn't say this when I introduced you, so I apologize, but you've actually been with the exchange since it started in 2000,
right.
in leadership positions since 2006 and CEO since 2016. Have you seen the quality of transparency increase significantly over the last 20 years?
Well, to be frank, I'm a bit shy to talk about ourselves, right? So that's better for people like you, VinaCapital, to comment on how you actually see our market.
Well, we have, but I was hoping you wouldn't be shy. But as long as you're asking me, you know, what we're seeing, particularly for the larger companies who are attracting foreign capital, they're already at what we would call international standards.
Right.
And so it is interesting that when we get these questions, and certainly people that have come and visited Vietnam, it's this mixture of a developed economy and obviously a frontier market, but business practices at, frankly, I would say most of the listed companies are already at international standards, but we still receive the questions as if they're not. And so we can say governance has been part of VinaCapital. You hear from our portfolio managers later on today and during the week. So from our perspective, transparency, corporate behavior has improved significantly over the last 20 years.
All right. So thank you for that. But the thing is, again, back to the ESG investment. So whether we as exchange want or not, and how much kind of effort we put in to help our listed companies, still some outliers in the crowd. Some of them, they are not interested in working with foreign investors, for example. Yeah. So they actually don't really care. Yeah,
well, that's, you know, that's true in any, well, it's true in any market. It's you know, how shareholder friendly are you? Right. But I think it is something that becomes more important. And actually, I would tell you, we've been heartened at VinaCapital that even companies that aren't seeking foreign capital are actually paying more attention to ESG. So regardless of where their investor base is coming from, right, it's becoming a bigger focus for them. So that's encouraging. All right, here's the, I don't want to say the most important question because they're all important, but the question we get on every client call we do, it's about the potential MSCI upgrade. Mm-hmm. So obviously the new trading platform that you mentioned will solve many of MSCI's concerns about liquidity, pre-funding, et cetera. The remaining hurdle seems to be about the FOL rules. Does the exchange have a vision on how to best solve FOL? If so, is there a timeline that you're able to share? And you know, I'll stop there.
Well, to begin with let's talk about the foreign ownership limit. Normally, a kind of the question that most of foreign investors are very keen on. But let's get to the fact that even in some developed market like Japan, for example, in some industries, in some companies, they still subject to the applicable law. For example, the aviation, or we talk about the communication, for example. So they still subject to some sort of foreign ownership restriction. But why foreign investors don't really complain about that? Well, that is the kind of the question that we in Vietnam, we try to have a better understand about the mechanism and how they work on it. And I believe that because this is a law saying that for certain industry, and that I believe that in line with things, bigger framework like a WTO negotiation, for example. So this is a roadmap for Vietnamese industries will be gradually opening up the economy until which time. So that's why the foreign ownership remain in play for a certain time. And because of that, it serves a certain purpose. So, and that made it into the law. And I believe that from the market perspective, the best way to deal with this kind of situation is that we learn from the practices like in Japan. So there's a law about the foreign ownership limit. Okay, we understand the limit. So help the foreign investor understand that there's a limit actually, right? So only this much percent of the ownership represented by the shareholders will be eligible to join the shareholders meeting, for example. And the rest, sorry, but that's out of the room. So the most critical thing here is from the foreign investors is about tradability. it doesn't matter whether the room is already up or still open, but as long as they can trade, they can make money from buying and selling the stocks in the market. I think that should be good.
So is it, and forgive me then, so is it the wrong question?
Right.
Is it more about the liquidity and the tradability as opposed to the foreign ownership limit?
Yeah, I think so.
And will the new trading platform solve that?
They should be able to do.
Okay.
Right.
So should we encourage people to ask a different
But
question?
that will have to do with some of the legal aspect of that.
Sure.
To deal with the law as well. Yes.
Okay, and so when we're thinking about FTSE upgrade or MSCI upgrade,
right.
Are they aware of what's going on with the trading and technology and everything like that?
Well, I believe that through our meetings with them, we actually inform them of what the system is capable of.
Okay, that's terrific. Any comment on NVDRs? Because we get that question. People look to us as what about the Thailand example?
Right. That is a very special and very unique, uniquely to Thailand. And I believe that in terms of options to deal with the foreign ownership limit, especially we're talking about the tradability again. So that is one of the options. But the thing is, we create another product, and it's going to take time to explain, to educate investors about what is what. And also, we need to set up the whole structure just to strip off of the voting rights.
So you're right.
Of the stocks.
And just to be clear, we've talked about this internally.
Right.
The concept of a solution that's faster, we applaud.
Right.
The solution of giving any types of shareholders less ability to impact behavior, we don't like. As someone that wants to engage with companies, the NVDR is a suboptimal solution.
Right.
So we appreciate taking a longer term focus because you want shareholders to be able to engage.
Right. So in terms of the tradability in the market and in terms of the kind of generic product, equity product for the investor, so they know this is a share. They are buying and selling the share. And if they want to register for shareholders meeting, they're going to stand in the line. First come, first serve. If they cut it off at, say, 30% or 49%, I'm sorry, it's full.
Yeah. Your dollars,
next time.
Taxation without representation.
Right.
All right, so let's move on.
Right.
All right, so again, another question we received from our clients the other day. Many of investors have expressed surprise, but happiness, that the VN index performed so well in both 2020 and year to date without the benefit of significant IPOs or privatizations of state-owned enterprises.
Right.
Understanding that this isn't something you can influence, but maybe you can kind of give a more forward-looking path. Do you expect more IPOs and privatizations the next couple of years?
Well, I think that it comes from two sources. One is we're talking about the state-owned enterprises. That remain, there's a big chunk of the big SOEs out there. And I believe that this is kind of a bit tricky and challenging in terms of implementation because those groups are so diversified and so many entities inside that kind of umbrella. So that's why the whole process will be very cumbersome and time-consuming.
Do you think maybe there's an opportunity to almost spin out like a subsidiary, or do they have to do the whole thing?
Well, that really depends on the strategy.
Yeah.
And the problem is sometimes the SOEs themselves, the group of SOEs themselves, they don't have the ultimate power to make decision.
Yeah.
So that's the point. So I believe that one of the important tasks to solve this kind of puzzle is really a kind of strategy perspective about how to streamline the whole process to make it more working.
Okay, and is that something that the exchange is working on, or is that more at the governmental level? No,
that is not. The exchange is only part of that.
Okay.
Part of that kind of process when the shares could be auctioned through the exchange.
Okay. Understood. And then what about just traditional IPOs?
Well, that's the second source.
Yeah.
That we're talking about, the private companies. Well, over the last, decade or so, we see the growth, tremendous growth of private companies to the point that they are more mature to get listed in the market, and also with the successful cases as public listed companies. That provided a very kind of inspiration for the entrepreneurs to set up the companies and to get listed as the way to exit as well, also as the way to build a company.
Yeah, I mean, as you know, VinaCapital, one of the things we talk about is we're a diversified platform with venture capital, private equity, and listed equity. So we've purchased companies that were private and then held them for 5-10 years, right. Helped take them public, and in fact still own them. So we agree 100% of owning throughout the life of the company.
Right.
Okay. Now, one of the things we've also seen, which I think has been really interesting, I think for you and your role, is a huge increase in trading volume. And so if we think of kind of first quarter 2021, average daily trading volume around 300 million. We've had days at about $1.2 billion, $1.3 billion. Now we're kind of averaging 850, 900 million every day. Yeah. Not once a week, right. but every day, 800 to 900 million over the last 18 months. Right. We've also seen local investors open up brokerage accounts in record numbers over the last 18 months. Right. In the last 18 months, more investors have opened up brokerage accounts than in the previous, in a sense, 18 years combined. Right. So these statistics of trading volume and new accounts they're linked. Do you have a view on retail participation, which I'll just say is still about 3% of the population? So 98 million people, maybe 350,000 accounts. Do you think that participation will increase significantly? Do you have a perspective on just kind of retail participation in Vietnam and what spurred that in the last 2 years?
Well, if you talk about the number of new accounts opened year to date, right? So the end of last year, we had about 1.7 million accounts. Yeah. And this year to date, we talk about 9 months, we had almost another million opened. So I believe there's a couple of factors, but it's very important that in terms of the internet and technology, yeah, that help the securities firm do we talk about the eKYC, to have the online account opening much faster and easier for the investors. And for example, one of the major brokers houses, they open like 35,000 accounts a day. Wow. That's absolutely out of mind, yeah, when we think about that a few years ago.
Surpass their KPI.
Right.
Yeah.
So certainly, right, the investor base among the domestic retail investors remarkably widened over the last 3 years or so. And I believe that is one of the driver that keep the momentum for the stock market. Even, and we see the level of maturity of the retail investor, domestic retail investor. If you think about 5 years or so before, right? So you see that domestic retail investors always watch, what is that? Institutional guys, what they are doing? They are selling, that's not good. But these days, well, actually they don't really care much. No. That's good to know, but well, that doesn't really matter.
Yeah. What we've seen, because we have a domestic mutual fund business, right, as you know, is it's interesting that term deposit rates in banks about 18 months ago for 12 months were nearly 10%. And so for those of you watching in developed markets or the US where rates are zero and Europe where they're zero or negative, if you can get 10% basically guaranteed from the bank for 12 months, seems like a pretty good deal. Interest rates have come down, term deposits 12 months, now 6.5, 3 months, maybe 4%. That's something that has obviously led investors or savers to become investors, and investors to say, hey, maybe this is something I should look at as a part of my portfolio. Do you have is there a goal in terms of participation, or is that somebody else's, thought in terms of do you want to see 10% participation? Do you think about that in terms of getting that base even broader?
Yeah, sure, of course. And we're talking about different indicators. So one of that is the percentage of the population, for sure. That is one thing. Another thing, we're normally talking about the depth of the capital markets as the percentage over the GDP, the market cap over GDP, for example. So this year, first 6 months, for the first time, Vietnam joined the other 3 ASEAN countries in the region to become the 4th that recorded the total market cap over GDP passing 100%.
Congratulations.
Yeah. So as you mentioned about the savers to investors, so certainly in terms of this context, yes, it works that way. But I just want to point out another angle, that we're talking about the financial system with the banking system and the capital market system in place. And if you look at the banking, most of the banks are now public companies.
Yeah.
And the capital market itself is the platform for the banks to raise money. And also in terms of the new investor, the new shareholders for the banks, you can see that they jump rapidly. So for one of the bank recently listed here, they said like the number of investors in their companies double over 9 months or so. So it's very important for the financial system that we talking about walking on, 2 feet, not rely only on the banking system. Yeah. But also we're talking about the capital market as the source, providing the solid investor base as well as the financial, the capital source for the banks as well.
Yeah, and it is. It's really a first generation of investors. When we meet clients in retail, we talk about financial planning, we talk about goals based, and if you've traveled in Asia, you understand that real estate is always everybody's first investment, and sometimes gold is second.
Right.
And so then all of a sudden equities are starting to enter that conversation, but not as an oh by the way, but hey, this is something I should pay attention to, because unlike real estate, it's liquid.
Right.
And so I think real estate will always be there, but as equities are now starting to come in all those conversations.
Right.
So as we have a couple more questions. So one of the questions we also get is in terms of product development. Mm-hmm. So obviously we've got mutual funds here at VinaCapital. We have an ETF. Do you see the introduction of new capital markets products, ETFs, maybe derivatives? People have asked us about short selling, so maybe make a comment on that. Are there other things that people should be on the lookout for, or can you say, don't wait because it's not going to happen?
Well, certainly with the new platform, technology platform, we should be able to do more in the market. So we talk about day trading, about short sales, about the other types of products. Currently, we have only index future on Hanoi Exchange, but I believe that the next will be single stock options, for example. That should be doable. Again, that is something in the pipeline at the Securities Commission, and I believe that it's going to take some time. But when the technology platform is ready, I believe that the time to market for those products will be shortened.
And I'll just go back because I may have missed it. Do you think that new trading platform, is that a 2023 or 2022?
No, next year.
Okay, 2022.
Next year, yes.
So next year it could be January, it could be June.
Well, we are now at the phase of final acceptance tests. Okay. All right. So we've done almost done internally among the exchanges and clearinghouse, and the next phase will be the testing with the securities houses.
So realistically, it could be a Q1 where the new platform is.
It might be the end of the Q1 and or or maybe in Q2.
I'm putting you on the spot, so I heard Q1.
Yeah.
Okay. So all right. So try. Any final comments? Again, this audience primarily international. We do have some domestic investors listening, but any final comments that should help people be focused on or excited about the future of Vietnam?
Well, I believe that over the years and even during this challenging time, our government and what we have done so far is remarkable. And despite the fact that we have been suffering quite a lot over the last few months, but I believe that if you look at the companies, we look at the investors and the reaction in the market, it's all lead to a good indication that the confidence is there for the turnaround of the economy. And I believe that that will help with a lot with the government's decision on what to do next. And with the understanding and support of the local as well as the investing community, I believe that will make the process really fast, turn around and make it more memorable year as the 2021.
Awesome. Well, thank you so much for your comments. And to those of you, if for instance there was a question that you wanted to ask or wanted us to ask that we didn't get to, please email me, Eric Levinson at VinaCapital.com. And listen, it's been fantastic. I mean, you've been in the exchange for 20 years, and as you mentioned, there have been more brokerage accounts open up in the last year than basically the previous 19 years combined almost. So these are very, very exciting times. The economy, we heard from Michael Kokolari yesterday, we expect to rebound in a meaningful way next year. And so I think, our view in the market, which you'll hear from others over the course of the next couple of days, is obviously very optimistic as well. So with that, thank you so much, and thank you again.
Right, thank you.
Right. Thank you, and now I'm very pleased to introduce Thu Nguyen. Thu is the head of our listed investments, and she is responsible for our local funds, our offshore funds, segregated accounts, and insurance-linked products. And we've asked her to introduce our investment philosophy as well as investment process. Now, when most folks think about investing at Vietnam, they first think about getting the beta call right. At VinaCapital, we think manager selection is equally important. So we've asked Thu, along with the portfolio managers Thao and Phuong, to explain their process and really to go over how they've been able to generate outperformance both 1 year and 3 years in terms of risk adjusted, and then really also highlight what their outlook is for 2022. And then just to give some perspective on the numbers, I mentioned the outperformance. I want to be very specific on the numbers, and this is year to date through September of 2021. VVF, which is our Luxembourg UCITS fund, has performed 40.6%. VAF, our Cayman vehicle, is up 48.1%, and that compares with the VN index at 23.4%. So again, the team is doing an amazing job, and it really gives me great pleasure to introduce Thu. Thank you very much.
Thank you, Eric. Good day, ladies and gentlemen. Here at VinaCapital, we are pro-growth investors who are dedicated to finding the best growth opportunities in the stock market. Our investment philosophy is built upon our core belief that growth should be achieved at a reasonable price. We employ a rigorous bottom-up research process to identify mispricing opportunities. This process is a joint effort between the research team and the equity investment team, culminating in investment proposals by our analysts to be discussed and debated at our weekly meeting. We build high-conviction, concentrated portfolios with a long-term investment horizon. We only invest in companies that we have a deep understanding of not only the upside potential, but also the downside risk. Stocks that we have high conviction in are asymmetric in the sense that their upside potential must be significantly larger than their downside risk. Once we find these gems, we will overweight them based on our conviction level and expected return, with due consideration for diversification requirement. We seek to deliver long-term sustainable alpha through active management. The fact that we have concentrated portfolios of highly selective stocks means that we can have a high level of engagement with the management teams of these companies. This, in turn, helps us achieve better performance. We are benchmark agnostic, with a bias toward undercovered stocks and sectors, particularly of small and mid-sized companies. We pursue the highest standards of integrity and corporate governance, and we are incorporating ESG in our investment process. We have a strong risk management culture. We manage our risks by first understanding them and then building our own risk mitigation framework for each risk factor. For individual investments, we have sensitivity analysis for interest rate risk, inflation risk, and commodity price risk, as well as industry and regulatory risks. At the fund level, we manage the portfolio beta according to our expectation of the market environment. We manage diversification to reduce volatility and drawdowns while observing the mandate restrictions. Our ultimate goal is to deliver consistent high risk-adjusted returns over the long term. How do we do that? Our investment process is a loop with 5 clearly defined steps. The first step is the opportunities identification. In this step, we apply a fundamental screen and an ESG screen to seek out companies with quality management, a strong balance sheet and strong cash flow, as well as satisfy our ESG rating criteria. In the second step, we perform fundamental analysis and valuations on all the stocks within our investable universe. This comprises of financial forecasts of at least 3 years, an assessment of the business quality, including business model, earnings visibility, and growth sustainability. We place a lot of emphasis on our meeting with the management because we can tell a lot about whether the management is good and experienced and have integrity or not through these meetings. We also perform channel checks and conduct various sensitivity analysis. We perform valuations using multiple methodologies and with reference or comparison to historical as well as with peers. Lastly, we establish the target price and make our investment decision. Once we've made our investment decision, we come to the third step, which is portfolio construction. In this step, we make the position sizing decision based on our conviction level and expected return of each stock, being mindful of the diversification requirements and the mandate restrictions. In the fourth step, we continuously monitor the investment in the portfolio and review the fund performance. And this includes monitoring each investment's operational and financial performance and monitoring the surrounding environments such as the macro environment, the industry and regulatory updates. We continue to make company visits and maintain our channel checks to ensure our level of conviction in the stocks in our portfolio. We also have our weekly and monthly reporting to our investment advisory committee. We have a disciplined exit strategy and only exit a stock when either the target price is reached or there's been a major change in fundamentals or the investment thesis or there has been an exogenous risk. Now on to the stock market. The Vietnam stock market had a great run this year, up 23.4% in US dollars term as of September end and ranked amongst the best markets in Asia. From the bottom in March 2020, the market has more than doubled. What is noteworthy is that liquidity has surged on the back of an influx of retail investors, many of whom opened their first brokerage account only recently due to the COVID lockdown. As a result, the average daily trade value increased 5-fold in the last 15 months to reach $1 billion across the 3 exchanges. Remarkably, local retail investors now account for 86% of total trade value, and they have absorbed the consistent net selling from foreign investors since the beginning of last year. We expect that foreign investors would reduce selling and return to the market from next year. As for retail investors, we expect their participation to remain healthy and that new accounts opening will continue on the back of eKYC, the continued low interest rate, and the low base effect. Because after a surge in new accounts, the total number of brokerage accounts in Vietnam is still just 3.8% of population, significantly lower than China and Thailand. At the current market size and liquidity, Vietnam market is already at an emerging market level. The only outstanding issue now is the foreign ownership restrictions, which we understand is being addressed by the regulator. In terms of outlook, we are very positive on the market from here forward because we think a lot of the bad news is already in the price. Recovery will start from Q4 and continue well into 2022 as our vaccination rate increased quickly to 37% of population now having received at least one dose. In valuation, Vietnam stands out from the crowd with the highest ROE at 19.4% and the fastest EPS growth with a forward PE of less than 13 times for 2022. We are bullish on recovery plays such as real estate and materials, consumer discretionary and banks. We also continue to like ICT, logistics and selective export plays. And here are our 5 investment themes. Domestic consumption is quite clear because our demography is in a sweet spot with the largest age bracket being 25 to 35. This means that we have 15 years before reaching the peak in consumption according to the spending wave theory. In contrast, the Thai population is older and already at their consumption peak. This explains why the Thai investors are all over Vietnam setting up business or acquiring stakes in companies from F&B to supermarkets. Besides the low base effect, as can be seen from low penetration rate of our consumer goods, our domestic consumption is supported by strong household consumption growth. Pre-COVID, our household consumption real growth rate reached 7.4%, far exceeding that of other populous Asian countries. Furthermore, the domestic consumption boom is strongly supported by the middle income class, whose size and income level increase at a much faster rate than the broad population. We estimate that this group would double in size to 26% of population in the next 4 years, which is a very strong catalyst for companies in healthcare, education, discretionary consumers, and retailing. Now, our second theme, urbanization, is the result of our FDI-led industrialization. The farm-to-factory transformation has caused our urbanization growth to be amongst the highest in ASEAN. Today, 37% of our population lives in urban areas. Still a long way to go to reach the level seen in Indonesia or China, and we are optimistic that this fast urbanization growth is conducive for real estate, materials, and construction companies. The third theme, digitalization, is driven by high internet and smartphone penetration in Vietnam. Maybe that's a bit contrary to common belief, but in Vietnam, we have one of the highest smartphone penetration rates in the world. Our population is young and tech-savvy. Our IT workforce is large and highly skilled. Our government is very pro-startup, and that's why our fast ICT adoption can be seen through the sharp improvement in our ICT adoption ranking in recent years. The e-economy is less than 5% of GDP today, but is expected to experience very fast growth. E-commerce gross merchandising value is expected to grow at 30% per annum to $52 billion by 2025. In this regard, we like technology companies, online or omni-channel retailing companies, as well as other companies that capitalize on digitalization to accelerate growth. The fourth theme is FDI and export. As you all know, Vietnam is widely rooted as a major beneficiary from the China Plus One policy due to our proximity and good linkage to the supply chain, our political and economic stability, and our lower cost of doing business, including lower taxes than China, low energy cost, and of course, low labor cost. It's worth pointing out, however, that while our labor cost is just half of Thailand's and a quarter that of China, our workers' skill level is almost on par with China. Because of this, for the past 10 years, we've been able to attract the high-tech FDI, which has transformed our export mix. Today, the once agriculture-based economy has the high-tech products accounting for the largest weight in its export mix. Last year, smartphone, laptop, and household appliances accounted for 44% of our exports. The export growth has averaged 12% per annum in the last 8 years, and Vietnam is now in the top 20 largest exporters of the world. We expect this trend to continue And on this theme, we like companies in industry parks, logistics, utilities, and infrastructure, as well as, of course, export companies. Last but not least, public spending is Vietnam's answer to the current logistics bottleneck to ensure that we stay on our growth path, as well as remain attractive to our FDI investors. The lack of infrastructure is very noticeable from your first arrival in Vietnam, as our main airports used to run at way above capacity in pre-COVID years. And only 22% of our roads are actually paved roads. We only have about a third of the kilometers of highway needed to connect the provinces effectively. The speed limit is extremely low on our national roads at just 60 kilometers, and we haven't got any subways or light rails like many other Asian countries. As a result, our logistics costs are among the highest in Asia at 16% of GDP. The government is well aware of this acute logistics pains and is determined to accelerate public spending in the years ahead. This presents opportunities for companies in infrastructure, materials, construction, and real estate. These 5 investment themes express our house view on the market. How they are applied to the funds will vary depending on each fund's strategy. And as always, stock selection is key. Now, before I invite the 2 portfolio managers to come on stage and have a panel discussion, I will do a quick overview of the funds. As you can see, despite some small differences in the fund strategies, in that VAF focuses more on small and mid-cap companies and stocks that have reached full foreign ownership limit, the 2 funds have applied our investment philosophy and process quite consistently. This can be seen in both funds having significantly higher EPS growth than the market, while trading at a steep discount to the market in terms of valuation. The typical valuation gap between our funds and the index is 15 to 20%, and both funds have very high active share, at almost 70% for VVF and close to 80% for VAF. In performance, both VVF and VAF beat the VN index by a mile this year. VAF's return more than doubles that of the market for all of the periods from year to date to 3 years and since inception, while VVF's also beat the market by a significant margin in both the short-term and the long-term performance. With that, I would like to introduce the 2 portfolio managers, Thao and Thu Nguyen, to come on to stage and have a panel discussion with Eric. Eric, over to you.
Thank you. Thu, thank you so much. And now we're here with Thao and Phuong, and we are going to dig deep into the portfolios. Thao manages VVF, Phuong manages VAF. And so, the question on most people's minds right now, and it's questions that I've received in the last few weeks from a lot of folks, which was great, is, okay, did I miss it? And can you do it again? Because the market had a good year in 2020. It's had an even better year in 2021. So the existing clients are feeling great. People that were evaluating Vietnam are now saying, did I miss it? And if I didn't, hey, can you deliver it again? So Thao, I'll start with you. Are you confident you can deliver the same type of alpha going forward?
We believe we can generate alpha and deliver good risk-adjusted return in the long term. Here are the reasons why. First, the outlook for Vietnam stock market is still favorable as earnings forecast is strong at 35 to 40% next year. Market valuation is still very compelling at around 13 times PE for 2022. Secondly, we think the market will continue to see dispersion in performance among the stocks, and there will be opportunities for stock picking. Having said that, our rigorous bottom-up research-driven process will enable us to find the winning stocks. In the meantime, portfolio construction is also very important. We focus on building a portfolios of high active weight in the stocks that we have high conviction in and know deeply about. Last but not least, our portfolio is well positioned for the recovery as well as the long-term growth story of Vietnam.
Thank you. And I think it's interesting, and I asked the question, you gave a better answer than the question I asked, because it really is still about 2 things I said in the beginning. It's about the beta call, but it's about the manager selection call. So now one word that you used in your answer was dispersion. Now, Phuong, in your portfolio, VAF, you tend to focus a little bit more on small and mid. Is it naive to assume or correct to assume that there's even more dispersion within small and mid? And does that change the way you think about your outlook for 2022 and your ability to deliver performance?
There's even more dispersion of performance among the small mid-cap stocks. So one of the major objectives of our fund is to uncover the companies that are overlooked or relatively unknown to the market, where we believe the mixed pricing often occurs, and that way we can create alpha. But to find winning stocks, we have to work harder on the assessment of each company, and then must be able to evaluate the management's execution capabilities. And we do all of this through continuous monitor with the companies, regular update, and also channel checks. And we want to make sure that they will deliver as they planned and communicated with all the investors. So the result of this process is that we have a portfolio of 50% of the small mid caps that were not covered by the or not covered actively by the sell side research at the time we purchased, and those names are actually a major source of the alpha for the fund.
So let's stay with you for a quick second. So small and mid, you talk about your research process. Can you give an example of what the process looks like and how what you do is not only different, but really advantageous for shareholders?
We apply a continuous research process which enable us to build a watch list of companies that we have known for years, and we actually understand both the good and bad prospect of those companies. And through regular updates, we are able to find out the appropriate entry point that bring us higher return. So one of the example in the portfolio is a top industrial park player which owned a large land bank in prime locations. So we recognize that it is a very attractive investment candidate for the fund, but the stock was a laggard for a long time. So during our continuous research process and monitoring with the company, we realized a turning point, an appropriate entry point, where the large land banks of the company can be unlocked into profitability. And that's why we bought it before the market noticed, and the stock actually increased 80% year to date, and we have a 2.5 times of earning return since our purchase.
And how long, just curious, how long did you actually cover that stock before you actually purchased it?
We know this stock for around 3 or 4 years ago, and then we just purchased them 1.5 years.
Okay, yeah. Excellent. So obviously the first two answers were very bullish both on the market as well as our ability to deliver performance. So I'm sure the audience is saying, okay, VinaCapital, fantastic track record, but it's a manager in Vietnam that's bullish on Vietnam equities that also is bullish on their ability to deliver performance. True. Having said that, not every headline is not rosy. So Thao, if you think about the risks that are out there, both in the market or at the company level, what are the risks that kind of keep you up at night as a portfolio manager that you're always making sure that you're mindful of?
There are some headlines that you may have read about in recent days, which are shortage of labor and supply chain disruption in Vietnam. As you may already know, Ho Chi Minh City just reopened in early October, but some workers have not come back to the factories yet. And this may cause disruption in production in a quarter. But I think this may affect more labor-intensive companies like textile or garment. But those are not our biggest risk in the portfolio, because most of the companies in our portfolio are value-added companies, and they don't have such kind of labor force risk. However, COVID remains our biggest concern because it may lead to further business disruption and forecasting error. So therefore, at the moment, we focus on companies with strong fundamentals, market leaders, or company with recurring revenue. We try to understand beyond what the guidance looks like. And another risk that we are very mindful about at the moment is the new non-performing loans formation due to the pandemic, as we have certain exposure in the portfolio to the banking sector. However, the banks in our portfolio are leading quality banks that have very high loan loss coverage ratio to cushion the impact, if any. While we do not see a systematic risk yet, we will continue to closely monitor the NPL risk and will make any adjustment if necessary.
So one of the risks that Thao just mentioned, I'm more and most worried about the shortage of labor, both during COVID and the post-COVID. But there are two exporters in my portfolio, which are supposed to be the most impacted, have managed their labor force so well, even during the lockdown. So they can maintain a capacity of around 50% and then quickly increase to 80% in a very short period of time. So the company did this by make sure that and manage the high vaccination rate for their labor, and they also provided good welfare programs for the labor force. So given that track record, I believe that these companies can even do better in the next year given the recovery. But another concern related to the small mid-caps company in the portfolio is the financial health of them, given the prolonged COVID wave. There's a general perception in the market that the small companies, they are more vulnerable to this risk. But when I reassess all the holdings in the portfolio, we see that they have very strong balance sheets and even more flexibility in cost reduction. So that's why they are quite resilient.
Excellent. And again, remembering you're not buying the entire basket of small and mid-cap stocks, you're just buying a select group of leaders.
Yes.
So, as we think about, we've talked about why we're excited, we've talked about what, risks there are there any themes, when you look at your portfolio, are there any themes that you're excited about that are coming through in the portfolio?
FDI and export is one of the investment theme I think has lost lots of tailwinds in the long term. But the portfolio has around 25% exposure in these themes, reflected in holdings in industrial parks, logistics, utilities, and also direct exporters. I like the theme because our in-house research believes that Vietnam will persistently attract strong FDI inflows in the next few years, and also that create demand for industrial lands and also the ports and warehouse services. And another thing is we see that Vietnamese companies can increase the market share in export to US in recent years and in the next few years. Given that, when we select the companies in these themes, we emphasize companies with room and also concrete plans for expansion to ride that future growth. And also, they have to have a competitive edge against the peers.
So, Phuong, you said exporters, and when I hear exports, so maybe this is a bias I have or I've been reading about recently. It seems, I don't want to say cyclical, but it seems like there's a seasonality or a certain level of volatility with export companies, and maybe because of COVID. Does having exposure to export companies give you a heightened level of volatility in the portfolio?
As mentioned, because we select these companies based on their competitive edge against the peers. And more importantly, this company must have a proven track record that shows that they have a consistency in earnings performance despite the volatility of the export market. And plus, we just have around 5% of the exposure to these direct exporters. So I think there's not too much risk. But talking about risk, I think we are not afraid of this volatility because there's always upside for taking calculated risk. And actually, our local knowledge will make active investing far more valuable than the passive one.
Okay, so you talked about the themes that are in your portfolio. So Thao, when I look at your portfolio, I see definitely high conviction. I see more of a focus on kind of mid and large. Are there any themes that you look at in terms of building a portfolio that may not be evident just by looking at the sector breakdown?
Well, one theme that stood out in our portfolio is digital transformation. It's not just a sector, it's across multiple sectors, either in IT or banking or retailing. The fund's exposure to this theme is 29% of NAV. Digital transformation is a key theme in Vietnam at the moment. And when I look at the companies, I do look for disruption and their technology adoptions. So companies that can execute their digital strategy better can gain market share through this and increase sales, better cost optimization will have higher weight in our portfolio.
So, it's funny. So Michael Kokolari in yesterday, in day one, talked about digital transformation and the digitalization of the economy being something that not only is happening, and it kind of was accelerated because of COVID. Can you give the audience an example of a couple of the companies that are leaders or maybe have even grown their share because of their execution of digital transformation?
Well, we have FPT, the software companies that provides digital transformation solutions like cloud-based services, data analytics or automation services to domestic and international clients. We have Techcom Bank and MB Bank. These two banks invested heavily in their digital platform in recent years, and they can acquire new customers. Their mobile banking apps are ranked among top finance applications in Vietnam. Their app users and new customers are increasing at faster rate than their peers. On the other hand, we have Mobile World, one of the leading retailers in the country. The company is also invested in their retail websites and core ERP system to transform from a brick and mortar model to omni-channel. This helped the company to enhance their customer experience, increase sales, and optimize their operating cost.
Excellent. Well, Phuong and Thao, thank you so much. Now we're going to transition to the Q&A with the audience. So I see a couple of questions that were already typed in the chat function. So if you have a question for Phuong on the VAF portfolio or Thao on the VVF portfolio, please type it in. Now we're going to bring two here. So we're going to have our live Q&A. And I've already seen some of the questions coming in from the audience. So if you have additional questions, please type them into the chat function. Thu, please join us here, and I'll move a stool for you.
Thank you, Eric.
All righty, here we are. So, okay, so first question already coming in. So the question is, there has been a significant influx of local retail investors into the market. Has that had any impact on how we manage the funds? So, Thao, I'll ask you that question.
No, it does not, because we are long-term investors. We focus on kind of revenue, earnings, free cash flow of the company, and things that we can model on. If increasing retail trading leads to more market volatility, it works to our advantage because we do the research, we know the companies well. If we like one company and the stock price gets cheaper because of the market volatility, it would be an opportunity for us. However, I think retail participants, that's kind of information we should need to look at and analyze at market data, because we need to understand and be informed about its impact on the aspect like stock valuations or market behavior in certain events like earnings reporting or new share issuance.
Okay, terrific. Okay, so a couple of other questions here. Okay, they're all coming in at the same time. Two, this one is more about the platform, so I'll go to you. So we have two portfolios here. We have VAF and VVF. Are we doing anything? We've gotten a lot of interest from wealth managers. Are we doing anything to make the funds more attractive for investors and for advisors?
So besides delivering a good performance for our investors, we constantly look at ways to improve the experience for the investors. And when we look at our product structuring, we've decided recently to restructure both products to make them more attractive. And for VVF, we are going to consolidate the share classes from 7 to 4. And from January of next year, we've also decided to remove the performance fee. And on VAF, we've also moved from quarterly liquidity, or rather quarterly redemption, to monthly redemption. And this is going to be effective soon.
Okay, excellent. And so we think that will, again, feedback that we've received from investors have said, hey, this is what we believe would make it more attractive to help gather assets. Okay. Thao, this is a question for you. It's a follow-up on digital transformation, which is, was digital transformation a theme before COVID? Was it a theme inspired by COVID? If it was before, did COVID kind of expedite that? And kind of did that impact the way you thought about weighting it in your portfolio?
Well, the digital transformation theme has been in our portfolio for a time. Before COVID, the exposure in the fund is around 10 to 15%. But in the last 12 months, because of COVID, social distancing and lack of mobility, so we think this trend will accelerate the digital economy during COVID. So we increased the weight of this theme in our portfolio from 15 to 29% at the moment. And this contributed to the fund's year-to-date total return at 43% of year-to-date return of the fund.
So 29% exposure, but 43% of the performance.
Yes, and I think this continued to give a long runway for several of our core holdings to growth in the future.
Excellent. Thank you. All right, so here's a question. Let's see here. So this looks like a question for Phuong. So, okay, so it's about small and mid-cap exposure. And so, mostly in the developed markets in particular, small and mid tend to have more volatility than larger caps. Understanding that, roughly 45% of your portfolio is small and mid, does that mean that inherently VAF is more volatile? Are small and mid stocks just more volatile than large cap stocks in Vietnam?
It's very interesting to see that the small and mid-cap stocks actually has the same volatility profile with the large cap stocks reflected in the standard deviation of the last 2 years. About the fund, actually if we look at the risk-adjusted return through the Sharpe ratio, we have a tripling that of ratio compared to the market. And also we measure the volatility through the downside standard deviation of the fund, and compared to the market, we have lower. So it means that the fund also has a lower volatility in the market downturn.
Well, and if you think about it, if you look at all the listings on Upcom, or you look at the listings on Hanoi, I mean, I don't know exactly how many small and mid-cap positions you have, but relative to the entire universe, what percentage are you buying?
Yeah, it's very small because we have nearly 30% position, and half of that are small mid-cap, so very small numbers of stock compared to the whole universe.
Yeah, so the basket, there may be some companies that are more volatile.
Yeah.
Those aren't the ones you're buying anyway.
Yeah.
Okay, interesting. All right, so here's another question. So let's see here. So, all right, so if tourism comes back, or I guess when, articles recently talk about a January resumption of tourism, does that have a big impact on the economy? We've talked about by being 7-8% of GDP. What are we doing to prepare for that? And does that also give more kind of strength to the domestic consumption story? I don't know if you, maybe Thu, take that.
Yes, so tourism contributes to 7 or 8% directly, but with the indirect contribution, it could total 12%. But when you look at that, it's mostly contributed by the foreign tourists. And at the moment, to be honest, I don't really know when the borders closure would ease and the foreign tourists can actually come back to Vietnam. But With that being said, we are well positioned to capture this recovery whenever we have a clearer sign of that happening. And we have basically lined up a number of potential stocks, recovery plays such as the airport company and a couple of other retailing companies. In fact, some of the retailing companies would also benefit from the domestic consumption as well as tourism. So they already are in our portfolio today. But just on the airport and a couple of other specialist retailing company at the airports, they would be added later.
Okay, terrific. And a question just came in specifically about oil. So the price of crude plays an important part in particular investment advisors' asset allocation decision. How much impact on portfolio returns is there from the price of oil and overall energy consumption? Because in Vietnam, energy consumption is quite high. So I guess, does the price of oil have a big impact in the equity market in Vietnam, and particularly in the portfolios that you manage? So I'm not sure anyone can take that.
Thao.
Thao, you've been volunteered.
Okay, for the portfolio, for the companies in our portfolio, the impact on higher oil price is not significant because most of the company in the portfolio are service company, and they is not involved with the kind of transportation. Yes, it does have some kind of impact, but it's not significant. And we also have some exposure to some natural gas company to enjoy this relief of oil price in the portfolio.
Actually, if I may add, I stated in my presentation that the logistics cost in Vietnam is quite high. And this year, transportation contributes, I think, 64% of CPI increase just because of the oil price. Right. And so obviously it's impacting a lot of companies in terms of adding to the COGS, cost of goods sold. But we believe that most of our companies, even if they are not in the service industry and in the manufacturing industry, they have the ability to pass on some of that to their customers.
Yeah. So Sanjeev, I would say we're optimistic that regardless of the price of oil, that we think that it will not significantly impact our portfolio. Here's a follow-up question on digitalization. So, are there enough digitalization opportunities in listed equities, or are they more in the private markets?
Like I mentioned earlier, digitalization is just not the exposure to one sector like information technology. It can be across multiple sectors, and if any companies in those sectors can adopt the technology, execute their strategy in digitalization well, they can increase shares, market shares, increase sales, and optimize cost. That's could be our exposure to this theme. It's not just limited in one sector.
Okay. Now here's I like this question. I'm not sure it's fair, but someone asked it, so I'm going to ask at least the PMs, and two, you can weigh in. What is your highest conviction stock or industry for 2022? And I'm just going to say that I love the question. Let's give a sector or a theme, not a specific company, unless you want to give a company.
Yeah. For VAF, besides FDI and export, which is 25% of the portfolio I mentioned earlier, we're also very bullish on the public spending theme, and we have around 15% of the exposure to this theme because we think that Vietnam actually has a need to invest heavily on the road and highways infrastructure to facilitate the FDI inflows in the upcoming years. So the companies in the theme actually have to be benefit from this trend going forward.
I agree with Phuong. So our fund also have a significant exposure to public spending theme.
It's so interesting. So there's a follow-up question, which is a little bit similar. And so this was as they're referencing kind of the conversation we had last year. So last year we were talking about the decisions you made, which were really excellent and well-timed, about going a little bit more defensive, coming out of March and April of 2020, when the COVID was really just beginning and no one really knew what it was going to look like. Here we are in October of 2021 we all believe the worst is behind us. Vaccination rates are increasing, and Vietnam is, at least internally reopening. How are you, or how have you in the last couple of months repositioned the portfolio overall, for recoveries? So as you think about, the changes you've made in the last couple of months, can I maybe describe that?
Okay, I can go first.
Yep.
So for the last 9 to 12 months, we have repositioned our portfolio to fit in the recovery theme of Vietnam. Before, like in March 2020, we reduced our exposure to vulnerable sectors during COVID. But recently, we started to add more recovery play in our portfolio, like retailing, or banks, or some cyclical stocks in industrial and materials, in order to be better prepared for the recovery theme next year.
Yeah. For VAF, last year we took a more defensive stance in the utilities company and high dividend yield companies. But then starting at the end of last year, we see that Vietnam had a very good recovery and very resilient. So we actually started to reposition ourselves toward the recovery. So that's why the fund now has a higher exposure in industrials, in materials, and also the consumer sectors compared to last year. That's why we can ride for the growth in recovery next year.
Perfect. Okay, Thu, here's a question. How do you think interest rate increases, let's say potential interest rate increases, and tapering in the developed markets will affect Vietnamese equities?
We actually have the view that the tapering in the US or even in Europe will not have a significant impact on Vietnam. That being said, we see some signs of interest rate picking up from next year, and our house view is that domestically, it could be a very mild increase of 0.5% or maximum of 1%. And with that, our lending rate in Vietnam is still very low. Especially, it's much lower than other ASEAN as well as other Asian economies. So it's still very conducive for the economy to expand. In fact, if you look at the GDP growth forecast for next year, it's healthy at 6.5 to 7%.
Excellent. Okay, well, we've gotten nearly all the questions. So, Thu, I'm just going to ask you for kind of closing comments. So we've talked about the funds in particular. A question came in earlier that I didn't get to, which is there anything else on the platform that we either haven't touched on? So when I introduced you, I mentioned that you're responsible for segregated accounts, ILPs. We actually have fixed income opportunities we really didn't talk about because it's more of an equity-oriented panel. But as you think about the platform in the future, kind of any closing comments?
Yes, as part of my presentation, I said that we've implemented the philosophy and the process very consistently across the platform. So these two funds are not a result of cherry picking. We basically have all of our funds perform very well this year, with the local funds are currently ranking at the top position within their respective category. So Visa, for instance, is an equity fund that's been the #1 running for the second year, last year as well as year to date this year. And this year we returned 58% versus a market return which is 23%. And VEOF is also our fund, and it ranks the #2 in the market at 45%. Even our balanced fund with only 50% equity has returned 32% this year and ranked in the #1 position as well. Our fund, fixed income fund VVF, is currently also the #1 fixed income fund in the market, in the local market. And also we are ranking #1 again in the insurance-linked product that we manage for our clients.
She's doing my job. This is excellent. Usually it's the sales guy that gets to quote the numbers. And one comment, VAF, the portfolio that Phuong manages, stands for Vietnam Access Fund, and that actually buys VSAF. So it's a way that a foreign portfolio can access a local fund. So if there's any questions that we didn't get to, feel free to email me, Eric Levinson. But again, I want to thank everybody for joining us today. It is Women's Day in Vietnam, so it's a special day, so thank you all so much. Next week, on Tuesday of next week, we will have day 3 of our investor conference. We'll be joined by Andy Ho and the team from VOF, the Vietnam Opportunity Fund, and then the following Wednesday is day 4 from our investor conference, which will be our final day, and the focus there will be on our alternative platform. We'll cover real estate, renewable energy, venture capital, and then also financial services. So again, thank you for joining us. We hope to have this posted online in the next 48 hours, and thank you for your continued support.